What's your dream house? Is there a humble abode in the Wimmera Mallee that has captured your imagination with its ivy-clad brickwork or marble island bench? Well, put aside a bit of super and it could be yours. That's according to a new policy announced by the Coalition over the weekend, allowing first home buyers to put up to 50 grand of their superannuation towards a deposit on a house. You do have to be a owner-occupier, but there's no income limit. So what are the pros and cons of doing so? Rob Goudie is a financial advisor in Horsham. Good morning, Rob.
Good morning, Rebecca. How are you?
Yeah, good to have you with us. Firstly, what are the details of this super home buyer scheme and how does it work, do you think?
Look, so the details for those buying a first home, where it's a new or existing home, can utilise up to 40%, up to a max of their superannuation, up to a maximum of $50,000 to help with the purchase of their first home. So it means that they'll be able to potentially get a larger deposit sooner and buy their home earlier.
Okay, so from a financial advisor's perspective, is this a good idea?
Well, I think from a pure financial side, if we got the calculator out and we look at the reason why super was implemented, late 80s, early 90s, the sole purpose, and there is a sole purpose test, is about saving for retirement, reducing people's reliance on government support, the age pension. So that's the financial side of it, but the emotional and the psychological side is that owning your own home provides a lot of security. So financial well-being can be split up into those two parts, the pure financial, and then there's the emotional and psychological side. So owning your own homes sooner and having the security for yourself and your family is key for everyone around the world. So there's positives, there's more negatives on the financial because there's a huge cost of having money taken out and put into an asset that doesn't provide any income to you, which is our homes, regardless of what our homes are worth. They don't provide any income. And taking $50,000 out of super has potential hundreds of thousands dollar impact on your retirement benefits, 30, 40 years down the track. So there's two angles.
Yeah, it is. And it's not going to work for everyone though, is it? Or is it?
Well, it depends. I had a look just earlier on, what is the average age of a first home buyer? And unsurprisingly, Australia, Canada, New Zealand, it's mid-30s and above. And Switzerland is actually 48. And that's because our home prices have become so extremely expensive with extremely low interest rates, and policy like this is having a huge impact every time there's a shock to the system, a GFC, COVID, or the GST back in 2000. The government's been handing out grants and first home buyer schemes and stamp duty reductions to encourage first home buyers, which is great. But the downside of that, it's inflationary. It pushes up the prices of the properties that everyone's chasing.
Yeah, so I guess you'd have to be pretty switched on to make it work for you, wouldn't you?
Well, I think in an ideal world, say people, the Liberals get in and they implement this policy and it all goes through the legislative process, that if people use this and all of a sudden they're taking out a huge amount of their super and that gets them into the market, which is great for themselves and their family and the security that they're after, I think there's got to be a second component to their planning where they're now making increased personal superannuation contributions to help fill the void. And because one thing I've always told clients, it doesn't matter if you live in a $10 million house or a $300,000 house. It doesn't provide you any income. And what dictates the fund you have, or partly what you do in retirement or in life, is about the income, disposable income you've got. That can help dictate some of the extra things you do in retirement.
That's right. It's also interesting because this also isn't an opportunity for people to say, well, we'll get the bigger house with the bigger yard and the bigger bathrooms and the bigger bedrooms just because I can get access to that extra money. It might work for people. I'm just assuming it would work for people who sort of think a little bit more affordable for them.
Well, yeah, I suppose we've seen this happen over the last 20 years where the average home loan might have been $250 15 years ago. Now it's I think it's about just under $620,000.
Wow.
It's big numbers. So, and and to think about a first home builder's grant back in when the GFC hit around 08, 09, no one ever built their first home. So that's a reality now. That's what's happening. And yeah, does it mean that people take on more debt for the bigger house, and then that just reduces the time that they've got to save for the retirement, and at some point in the future that they've got to downsize earlier, and obviously that's part of what's happening with this scheme as well. That when you sell your home, that money plus capital gains goes back into super. But in reality, will that work? People really don't want to leave their homes. Is what I see. That we love our homes. It's security. It's all those emotional things that we love. It's where we brought up our families. Do we want to be selling it? No, we don't. We don't want to go into aged care. We don't want to go into retirement villages if we can avoid it.
Yeah, I hear you. And I guess the other thing is just because later on, just because your home will increase in value, obviously due to time, but it doesn't mean it's going to increase in value enough to sell it to try and replace what you've just taken out of your super, would it?
Well, that's the huge opportunity cost. We've seen so many inflationary reasons why property prices and all assets have gone up so substantially. And number one reason for that is interest rates going to all-time lows, and now they're edging up. So we're in a cycle that might be for the, everyone's so highly geared that these small interest rate rises have a huge impact. And will home loans continue to go up? Well, policy like this will help policies maintain or potentially go up, but are there going to be the substantial price increases we've seen in the last 20 years for the next? So are you better off, would have that money been better off in your super in a diversified range of high-quality assets, averaging 7 or 8% per year? And my short answer to that is yes, it would be better served in that space. But again, that's the financial or the calculator side of it, not the emotional and psychological side.
So true, so true. Thanks, Rob, so much for your time this morning. I appreciate getting your perspective. Rob Goudie there is a financial planner in Horsham. And thanks so much for his time this morning, getting his perspective on the government super home buyer scheme policy that they have made a promise, election promise, of course, if they get voted in at this election on Saturday.